Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on how to trade stocks with confidence. If you're new to the stock market, the first thing you want to do is find the right trading broker. It's important to understand that each broker has its own niche. Just because it's a big name company doesn't mean it's going to be the right broker for you. So each broker has their own positives and negatives. So when you're first getting started, a company like TD Ameritrade, they're a really good overall broker. They're good for trading stocks, really good for options, trading an IRA, decent for futures, great charting platform. Not the greatest for day trading unless you're doing small amounts of shares, then they're pretty decent. A company like Robinhood, they're more of a basic broker. They're good for when you get started, but then you kind of want to start kind of scaling your way up to other brokers as you get going with trading. Then there's other brokers, let's say like Speed Trader, Interactive Brokers, Lightspeed. Those brokers are really good for day trading, right? So when you're first getting started, you want to, after you choose a broker, you want to fund your account. Now, a lot of people will say, well, what's the right amount of money to put into a trading account? Well, it's going to be different for each trader, but you want to have at least a few $100s, anywhere up to ideally $5,000 in an account to get started, because you want to use that account as leverage to be able to make money. If you're going to do day trading, if you're going to do more than 3 day trades within a 5-day calendar day period, which most day traders do, then you're going to want to have at least $25,000 in an account. Otherwise, you won't be able to make more than 3 day trades within a 5 calendar day period, because that's called the PDT rule, or pattern day trader rule. So if you're going to be an active day trader, you want to have at least $25,000 in an account. Now, if you have a smaller type of account and you're just getting started, options are a really great way. Or even if you do have a lot of money in an account, options are great for making money within an account. Naked options, otherwise known as buying straight calls and puts, are really great. They are on the riskier side, but they're great for growth potential and growing an account once you know how to trade them. And option spreads, those are also another good way of growing a small account. You're not going to make as much as you would with naked options, but you're also not going to risk as much either. And when you become an option seller like you do with spreads, the odds are more in your trading favor to make a successful trade when you're doing spreads rather than buying naked calls and puts. However, there are so many different option strategies that are really good to trade. But again, you have to know how to trade them first. Also, micro futures. Those are really good. Those are newer that have kind of come on the scene in the past couple of years, where you could grow a small account and not have to have large margin requirements. So if you want to trade the major indices, micro futures are really good to help you grow a small account. There are also a lot of traders that will do penny stocks and swing trade them or hold them for longer periods of time. That's another really good way to make money when trading. However, you got to be very careful and make sure you do the proper fundamental research and definitely know your charting. So once you know the fundamentals of the penny stock, then you want to make sure you get a good entry and not buy at tops of markets, because you could be sitting through some painful pullbacks, and they're very volatile with penny stocks. So again, they're a great way to grow an account, but you got to know the fundamentals as well as the technicals to be safe trading them. Now, when you're getting started with trading, it's very important to develop your own strategy. You'll see a lot of pumpers out there or gurus out there in the industry. Don't follow them unless their strategy is what you want to be doing, right? You also don't want to just blindly follow them. You want to study what they're doing and then practice and implement it yourself. But just because there's a big name in the industry that might get a lot of hype, you don't want to copy that strategy, because it might be a dangerous strategy. There's a lot of stock pumpers that pump and dump penny stocks. Again, penny stocks are a great way to trade and make money, but if you don't know how to trade them yourself and then you follow a guru, you're always going to be late to the punch. So you're going to be late to entries and late to exits. So that's why you want to follow what they're doing in a sense, and practice what they're doing, and then learn how to do it on your own. Again, don't copy just trade alerts that somebody's sending out if you don't know how to implement them yourself. So it's very important to develop your own trading strategies and then practice it, right? And it's also important to trade only the best setups. And we like to say, sometimes the best trade is no trade at all. And that's the hardest thing to do with trading. It's controlling your emotions, right? You want to get in on the action, you want to make money, but the problem is, there's not always going to be a great trade setup, and it's important to be able to learn how to sit on your hands and wait for those setups to come to you before jumping the gun. And one of the best ways to gain confidence when trading is to practice paper trading, right? You're not going to be able to make money in a real account until you're a successful paper trader first. And I always like to tell people, treat your paper trading account exactly like you would a real account. Trade the exact same positions, use the exact same stop losses, invest into your paper trading account like you would a real account. And then when you're confident and you've tracked your successes, you've, kind of keep a trading journal and have at least a 60 to 65% win ratio. And always go for, trades with at least a 1 to 2 profit or risk reward ratio, right? So if you risk 10 cents, you want to have the ability to make 20 cents. If you risk $1, you want to have the ability to make $2 and cut your losses quickly. I can't stress that enough. If a trade goes against you, cut your losses. You can always find reentry, and trades will go against you. They happen to the best traders out there. Some of the best traders in the world still fail 30 to 40% of times when they're trading, but they keep their losses small. So when you're really good with paper trading and you've invested and you're getting the successes in paper trading, then you want to slowly scale your way up to trading with real money. So if you trade, let's say in 1,000 share blocks, you don't want to start right off the bat with real money with 1,000 share blocks. Maybe you start with 250. Then 500 shares, then 750, then slowly scale your way up until you're confident trading with the exact share size that you'll be comfortable trading. So obviously that's just a few tips to help you kind of get started with getting more confident with trading stocks. I can't put it all in one video, but on our website, we have several $1,000s worth of free courses on our website you can take. You can head over to bullishbears.com. We have courses on day trading, futures, options, candlesticks, all that good stuff. And we also have trade rooms as well. We have, we go over options, penny stocks, swing trading, futures, all that good stuff in our community. Again, you can head over to our website at bullishbears.com. The link will be below. And as always, if you like this video, we would greatly appreciate it if you follow us on social media, share, like this video, and post any comments below. So hopefully this video helped you, and we'll see you in our community.